Hey everyone, welcome to the midpoint presentation of the ZKPRET engine. Today we are joined by Satya. Thank you for joining, Satya. Over to you.
All right, thanks, Harish. Thanks, everyone. Good morning. Uh, Let me share my screen and get started. So the way I have structured this is a little bit of involved topic because it has some domain stuff as well. So I've tried to simplify it as much as possible. And also I've structured this roughly for 45 minutes. First 20 minutes, 15 to 20 minutes is more along what we are building. And then basically then the 15-20 minutes I want to kind of go ahead and actually demonstrate the aspects that we have built and get into the technical side of things, and also touch upon the deliverables from the logistics point of view. Thank you. Can I get started? Can everyone see my screen?
Yep.
All right. So this is the midpoint research, and this is a rough, this is where you can see the research protocol paper. And myself is Satya Krishnasamy. My partner is Dr. Badri. He's a renowned economist. He's working with multiple governments across the globe. And my background has been, I spent 25 years roughly, predominantly an architect and a senior director at a major insurance firm, building DLT AI solutions for the last 6-7 years, predominantly on Hyperledger and Enterprise Ethereum. There's a lot of things that I learned from that experience, and my final taking is privacy and scalability is very critical for blockchain adoption, and that's why I went full time on this. And basically, I've been kind of hunting down on protocols that can actually try to get some of these barriers broken. All right. So a rough thing, we all know this, but basically just to recap, so far the retail has held the fort on crypto for all the innovation. That roughly held it for about $1.5 trillion worth of market value. But then the next real push is really on the institutions side. The first wave of ETFs and things probably gotten into a certain level. But truly the big adoption, everybody is talking about it now. It's that all the work that was done on TradFi in private systems are all looking to see that really didn't scale. So what other options do we have? And when they do it, now TradFi meets DeFi, and really the focus is getting onto institutional DeFi. That's the realization people are coming to, and DeFi meets the real world. And what these are all things. These are not anymore speculation. This is actually people trying to move the cards in these areas. And when they do it, one thing is very critical: compliance, privacy, and scale. They seem to be exactly the key. Now, in TradFi Web 2, we traditionally had all this, like regulation, compliance, standards, enterprise assets, detailed business processes, UI, UX, and all that stuff. In Web 3, we have had smart contracts. First cut governance reasonable. There have been some mishaps, but we are still okay. It's heavy efficiencies, degrees of decentralization. We have been able to get a lot of future promise and huge interest, but still there's a whole bunch that is missing. What exactly is it missing? When we say institutional DeFi, tokenization, RWA, we are in the very early stages of really even understanding and telling what exactly they are. There are some projects that have gone forward in terms of tokenizing treasury bills and things like that. But truly to get the real economic engine into this, there's still a lot of things that needs to come together. One big portion is regulations. It's not just KYC, AML. That is just a start. It needs deep layers of compliance for every single thing that makes business sense in the Web 2 world to be effectively represented on Web 3. And then when we say compliance, what does that mean? And we will get into those details. Could it, if you really look at some of the financial instruments in the Web 2, the biggest compliance that is mandated Bank of International Settlements is based on 3. We will touch upon that a little bit. And then there is a lot of standards that are evolving. So for example, if I want to use an invoice for actually getting a loan, one of the biggest trade documents or the title documents is called the bill of lading. That is the basic engine that runs trade, and that seems to be in the front and center of the world right now. And anybody that wants to do trade internationally will have to tokenize that electronic bill of lading. And when you do that, then the next big piece is, okay, how do I manage risk in this new aspect? And that is another standard called Actus. And how do I do all these business processes? Then there are standards there like BPM and 2.0, where we are trying to figure out how would we bring this together in a standards-oriented manner into this tokenization framework. What this needs is a business infrastructure layer to effectively represent off-chain, data, processes, standards, everything on-chain. And obviously, the UI, UX, and now agents, this needs to really work for a bigger audience. And when I keep saying compliance and standards, what are these, right? Where are they? When are they coming? Who knows them, right? We have all known about the crypto side, EIPs and ERCs. That's all important from the crypto side of things. But then there's a whole bunch that is coming in from different jurisdictions. And as me and Dr. Badri have been kind of having these conversations across multiple jurisdictions, saying, what are they thinking? One thing is clear. In everybody's mind, blockchains and AI is not viewed just as a technology anymore. They are viewing it as as the key for their GDPs. That's literally what we are hearing from different government and ministry organizations. Now, in the US, we have been lagging pretty much. It's not a secret. But right now, there is a lot of focus. Basically, as of last week, the banks can now own digital assets. That came into law last week. And then we are kind of thinking about the stablecoin bill, expected 2025, market structure bill, probably in the same time frame. And they are talking about a huge compliance. It will be layered, but if it's going to be modeled alongside of what has been already done on the TradFi side, it could be Basel III or some derivatives of Basel III, and all of this is evolving at a very high speed. And these standards, as I talked about, global financial stability is a GDP standard. Electronic bill of lading, if you have to do this, that's DCSA. BPM and 2.0, that is the business process modeling language. Now, Chain, which is my firm, is basically participating in many of them, and Actus is one key aspect of it. And we are still, I think, in the first or second innings, but there's still a bunch of missing Legos to be built. But a whole bunch of things needs very unique capabilities, and of the shortlisted blockchains I've been looking at for the last few years. When I narrowed it down, I kind of landed up on Actus and Mina. So this all started in a hackathon that I won in 2024, and from that, all of this is kind of growing up. Now, what are we trying to build, right, to fill the gaps? So, just 1 second. So, what is missing is these things, and these are the drill down view of these compliance and standards. When it actually comes to actual physical components that we're building, what we're building is a business infrastructure layer. It's really what I mean by that is each one of these deep composition engine, the business process prover, the risk management prover, all of this can be run on its own, and the registry can be run on its own for different use cases. It could be something you're modeling the financial structure for a loan, a mortgage, possibly a stable coin based interaction, or a real estate interaction, and even need not be end to end. It could be one portion of it that needs a proof of compliance or recursive compliance, or it could be a deep integrity of data. This is important because most systems today, they simply take a content, hash it, give it to the other side, and say this is on the blockchain. On the other side, practically read does the entire workflow. They don't really use the opportunity of ZK, where if one side actually is in a relationship where you can actually use the work that the other side had done with a verification, where there were many examples in my last job as well, where a whole bunch of teams, layers and layers of business processing KPO teams do the same work again. Whereas with ZK, that could potentially get cut down to a factor of 1:30, which is a huge efficiency gain from a business perspective. So if you really are able to do a deep integrity of data to say, this title document is not just a hash of an image or a document, it is truly understanding the full content, and basically it can certify that it is completely compliant to the standards, and any related documentation for this, you can literally crash the amount of time it's needed to verify something, so that this can really come down to hours and minutes and seconds for many of these cases. And this business process prover, similarly, if something was supposed to have been done off chain a certain way, did it actually happen that way? And this time we are not just simply randomly doing some implementation and checking the other implementation on the other side. We are trying to see if we can bake it into a standard, and the standard that we have been able to pull it off is with the business process modeling language. The third piece is the risk management prover. For all this, at the center of everything finance is how do you manage risk, and Actors in the front and center of it, and we'll get into what Actors is in a minute. And for all this, we would need, where are the sources of data coming from, and basically for those, this registry is something that will eventually evolve. We have a small component modeled after that, but that is a more of an ecosystem thing that we keep on building. Now, all these are specific components. We will demonstrate each one of them. But then the reference implementation, I'm taking it as a supply chain finance example. And the reason why we are taking it is that is the lifeblood of most economies. And there are reasons we do this. And we'll get into the SCF. I don't want to spend too much time on the SCF side of business, but all this information is in this deck, but I'll quickly go through that as well. But what is Actors? The key of this presentation is about basically bringing together these standards into a blockchain framework, particularly what a framework like Actors gives us. That's a unified standard for all things finance. That's what it is. ActorsFRF.org is where all the things have been brewing up for Actors. This grew out of the 2008 financial crisis. On one side, what came about was, we need a better monetary system, the decentralization, the Bitcoin and so forth, that went on one track. And then the other track, they said, these systems that we have that are 50 years old, why is that it's not just the United States government that didn't have a clue on the systemic risk in 2008. Even individual firms like AIG or Lehman really couldn't truly say what the exact systemic risk was. It was too much obscure, and by the time things started collapsing, it collapsed very, very fast. And since then, Actors is trying to say, okay, can we get into a system where we can define these finance contracts in one single unified type? And that is being now tested out by FDIC. That's the Federal Deposits Insurance Commission in the United States, European Central Bank. And while they are pushing for compliance, they are using this as an opportunity when they have a hold on saying, okay, it's not just for TradFi we need this. We also need it for DeFi, particularly in this context of TradFi now entering DeFi, this could be a good way of trying to look at how do we do this. Now, Actors by itself is not a blockchain implementation. What it is a netting engine that can, as long as all the bank, non-bank financial stuff can be represented in this Actors framework, and it can take any kind of risk factor modeling you can put on top of it, and it can net many cash flow streams. With that cash flow streams comes all kinds of things you can do and prove to many people, and that gives us a big bed of multiple proofs that you can do off chain. And also you can run a huge risk management and proof system on top of it, while you're kind of trying to run it through both traditional systems and blockchain-based DeFi systems. All right. This is work going out of the Zurich Foundation and some universities involved as well on basically doing this. I'm part of that board as well from the user adoption group. And they are very keen on what I've been building, and by extension, they're very keen on Mina as well. Right. So what is it that we are building in a very visual animation, right? These are financiers. This could be TradFi, this could be DeFi, it could be institutional DeFi. They would have information that are IDs, meaning I am so and so. Basically, whatever they want to prove to somebody else, they might have some information that is public or an aggregated level, and then they have this full portfolio that would have things for privacy and business sensitivity. They have to work with regulators, like what we talked about, and even businesses, right? Your third-party, counterparty businesses. If you're an importer, you have to work with your exporter. If you're an exporter, you have to work with your importer. It's not just in the international sense, but it also is in any business sense. Now, what does Chainame and ZKPRET provide is basically, with those components we talked about, you'd be able to do this proof of compliance and proof of business parameters to anybody running through Actors risk server, which we are running one, and this will be basically be run. Eventually our goal is to decentralize all of this, but that decentralization will happen step by step. But these things, these pieces like business process prover, business standards data prover, the risk prover, these are all things that comes from multiple sources, from whoever the borrowers are and wherever the data reside, into basically a risk proposition and basically the proof of compliance and proof of whatever your business activity is that you want to convince to the other party without spilling out all the details of your portfolio, by basically effectively managing your private inputs, public inputs, and your public outputs. And those proofs can stay on the Mina L1. And we have tried this out with many of these standards. And our focus so far has been, am I just theoretically saying this, or can I actually work with these systems, and can we actually produce these proofs? That is what we have been focused on in these first few weeks. Primarily, this had a lot of research aspect to it as well, and that is what we have been trying to do. Our focus has been to try these and put it into Mina. Now, from here, which is not in the scope of this project, now Mina can become the hub for these proofs at a very detailed RWA tokenization oriented workflows based on a very deep risk management engine that can be put out. That's literally what we're building. All right, so supply chain finance, I'll just not take too much time on here, but the idea here is everybody wants to do supply chain finance. This is one of the underpenetrated areas, roughly $16 trillion overall. International trade finance itself is 2 to 3 trillion across all jurisdictions. This is the unmet need. This is where the capital markets want to meet the demand area, but right now they don't have much of a situation because they have a huge validation risk, and they really want to enter this business, but they don't want to do all the heavy lifting. And they need, why is this important? If we are saying DeFi is important, 1 billion people are going to use DeFi and all that stuff, this is where the real need is. All right, so these are the people. SAF is the MSME, the whole MSME thing, where they really need, are the ones that need the money. And right now, the Western capital markets also want a way to penetrate this market, but it just has not caught up yet so far. All right, so hopefully, with all these, better systems that can actually move the trust at the protocol level, this is possible. And secondly, the DeFi as a system, I think with all this institutional focus, can slowly graduate towards the next level of workable systems. Why is this important? 95% of all companies are MSMEs. All right, so these are papers we have written on this, and this is about so many. It is not just any one market; it's across the board. This is a picture. At the end of the day, what we are trying to do is, this is an engine that will feed into whoever wants to do this supply chain finance. How do they know what is their exim risk? Which is, how do I reduce the risk from, let's say, 100 to 30, and I'll tier these systems. These are all systems that Deutsche Banks and the Lloyds Bank don't want to get into, because they want somebody to they don't want to do invoice by invoice by invoice. They just want one SPV where they can say, this is $100 million, give me the best invoices possible. That's the place where we are trying to play in. But we want to also make sure we are playing in the next generation of these systems, which are privacy protected, and basically, with privacy and business sensitive consumers. They are now asking a lot of questions to say, why should I just get finance from one person? Why can't it be from multiple people? And that's the promise that DeFi is supposed to solve for them. All right. So this is basically what it is, and these are the nitty-gritties of what goes into Actors. This is market risk, credit risk, and behavior risk, and these scenarios can go in, and these are all the data that go into these. We will demonstrate each one of them, and this is the high-level architecture for ZKPRET. Basically, why Mina, right? Why is it that okay? Why ZK? We answered that, but why Mina, right? When we looked at multiple of these things, we were not worried about the speed of the proofs, etc., at least not at this point. At this point, what we wanted to truly prove was, is this even possible to bake in the standards and say, here is an effective way of taking what has been working from Web 2 into an effective on-chain representation, where you can have still a small footprint of proofs that you can assemble off-chain, and you can put it on-chain. From there, somebody else can drive the next workflow, right? So that's really what the focus was. And these are all heavyweight processes and heavyweight things that goes on off-chain, and hence building the ZK program way of building the proofs and assembling the proofs was very interesting to us. And that is why we tried doing this, and so far it has worked well. All right, that's what the thing is. But basically, in the composition side, we have also built it to multiple layers now. I will show the demo of that as well. But literally, if you have a proof, and then if you build a proof on top of it, unless the proof of on top of it, depending upon what the financier wants. If they say, I need the local jurisdictional proof to say this is a company that has an active standing in their registration in India, in Africa, in Saudi Arabia, wherever it is, I need a proof of that, but that's not enough. And I need another proof to say they have the import-export license that comes from this agency that is also there. On top of it, I also want to know that the global legal entity identifier is there, so that if I can have the comfort that I know who I'm working with. So if I put one proof over another proof over another proof, what happens is, if I have a 111, it will be a 1. But if I have a 10 and a 1, it will be a 0. Or the financier might want to say, don't worry about it, just give it to me as each individual layer. The engine is set up any which way. If you want to do it at a recursive level and you say, uh, all three proofs have to be true, we can set it up that way as well. So it's a very, very flexible engine for basically people to kind of do those kind of things. That is what this trade finance thing is about. Now, I want to stop here, and basically this is basically this picture is exactly what I wanted to get across today, Harish, in the simplest of the forms. This is practically what we are trying to do. Now, Basel III systems, what they are trying to prove, if you're a finance or a finance protocol, or basically a new system that wants to build a stable coin, or if you want to build a new DeFi protocol, how do you say that you took the deposits, you lent out the loans, but then you did everything that the compliance asked you to do? In the current world, in Basel III, the Bank of International Settlements does a few things. It basically says, if this is customer deposits, you have to treat it as this kind of an asset. If it is a loan, you have to treat it as this kind of an asset. If it is basically a stock that you in turn have, then you have to say you can potentially liquidate it. And if you liquidate it, there is a haircut that they would give for it. And there is some rules that they ask us to follow to say, based on this, prove to us that you had liquid cash so that you don't go insolvent, basically. So the idea is to, for example, in March 2023, when the banks went down and many of the DeFi crashes, in DeFi, the issues are a little different in the sense that the liquidation hunts are different, liquidation ways of doing things are different. Eventually, those things will also get added into the mix as the regulation grows. But what this infrastructure is setting up to do is to say, however you want to do this, it can be derived from the actors' cash flow streams based on the risk factors you defined, based on how good your business processes are, how good your business data is, and how you're modeling a risk. That's literally what we're building. Okay, I'll stop here. Any questions at this point? And then the second part is I want to kind of run some code and show it to you all.
Hey, thanks, Satya. I can read one out from Michael. He says, can you please share your GitHub repository for the project?
Yes. I can do that. And basically, we are here. And I needed some GitHub handles. And after the call, I'll do that as well. Give me 1 second here. Can I do that after the call?
Yeah, please, you can do it after the call. You can send it to me, and I'll pass it around.
All right. So now what we're doing is basically I want to move on to the demo. I want to talk a little bit of how we are doing it. Right. So I'll run a couple of examples, and then I'll do one example of a corporate registration that we are trying to do. Right. So here we are in this particular case. There are 3 levels of things that we are trying to prove. One is this company Zenova basically, is this registered wherever they are registered, and are they in active status? This is directly coming from the API, and this is a mock right now, but we are basically in the process. We are in roughly week 5 of what we wanted to be. We should have been in week 6, but we lost about a week and a half. But basically, we have been able to effectively connect to the right schema, map the schema, and be in a position to say, what does the business meaning of that schema in relation to somebody would want to say, yes, I now can agree that this is active. And this changes from situation to situation a bit. For example, in this case, the codes might be a little counterintuitive. So basically, what comes out of these, we map it, and based on that map, we take through the circuits and kind of produce these proofs. So what you're seeing, this is the data that is coming in, and then eventually after the data comes through, we are kind of also showing a state change. So we have built each one of these, like basically in here, the risk was LRAR 100 because the proof was generated successfully and it didn't. The assets are all passing, and hence the smart contract actually changes the state. This is one example. I will show one more example of the XM verification status. It's another source of compliance.
Satya, while it's doing its thing, so is it fair to say that the current ZKPRET engine can combine proofs of, for example, one of the APIs we saw with some other parameters that can be required for compliance and generate a single proof?
Yes. So first cut, we have been able to do that, and I'll also run the active simulation. We'll see all of that.
Mm-hmm.
Just the only thing is it takes a little bit time, but that time there are a little bit of quirkiness. It's just probably because we are still understanding all the runtimes of the Mina engine, right?
Mm-hmm.
Anytime I do a dot compile, it somehow, we have seen sometimes things run a couple of times. So there are some initialization steps that I am trying to make sure that I get it right. I might need some help from the technical folks on those kind of things, but eventually we are able to, yes, get the data correctly, make the state changes correctly, assemble the proofs and all that stuff. Okay, so this is the second one. All right, here basically this mapping is different. In this case, based on the Director General of Foreign Trade of India, when they say IEC status is 0, that means it is good. Okay, so you'll have to change the logic basically here. So it's they have a few codes that says if it is this and this, then you are in suspended status, whatever the status might be. So we do the mapping there as well. So now we got 2 proofs, right? I'll show you the composition that you asked about. This composition is not 100% done yet, but to just prove what you're asking for, I can run this one. Give me 1 second. Okay, what this is doing is this is a example data that has been taken, but what it is doing is first it is making the first proof for registration, and then it does the exam, and then it puts another proof together where it says if I got both the proofs, and then when I'm doing the LEI proof, it actually does the earlier proof.verify in a recursive manner and be in a position to prove out saying the second proof or the composed proof is what it can be put out basically as one proof. And this is running as a ZK program. And that ZK program is tied to the smart contract, which affects the state change.
Cool, thanks. While it is compiling, I'll ask another question.
Yeah.
So currently, is chain AIM the entity which generates these proofs, and from the circuits.
Correct. So
And yeah, because I'm trying to understand like the trust assumptions, because the data is consumed from a
correct,
third-party API, and then
correct.
you are the processor who is kind of like attesting and putting your name behind it to say like we've run it
Yeah.
and we've validated it.
Right. So that is what that is the piece that we are very interested in, kind of figuring out how to grow the ecosystem. Basically, for example, right, of these pieces, step by step, I think for the Actors risk server itself, we will be one of the companies that is running the risk server, but there will be other players that will be running the risk server too, right? So this can run as a decentralized service. This one by one, we think we can run these as a decentralized services as well. To say it is not just if we are able to, it will start with a TE type of environment, but we are pretty confident that whatever we are talking about here is basically pretty standards based, and we would be able to support standard by standard to say these services can eventually be decentralized. Okay, and again, everything that we're talking about is basically saying as long as the data comes in and the problems that are picked up are standards based, that's possible.
Yeah,
Right.
thank you.
So let me go back to this thing. Okay, this is third level compliance proof. So basically, this is the first corporate proof, trade proof, and then basically it puts it together for the third level proof, and it does the verify of the earlier two, and then puts it together and puts out the final proof. Okay, so this is on basically just the proofs level, but we have taken it a little further, and I want to kind of go to a business process proof right now. We have both the I'll first show the Mina on-chain contract verifier picture, right? Thanks to Mahmood, he has been helpful in kind of when we are conceiving this a couple of months ago. We were thinking this could be possible, but with a little bit of tweaks here and there, we have been able to accomplish this. What I'm talking about is there is something called BPMN, Business Process Modeling Language, right? So here, what you can do is you can actually model a business process. This is a business process that is modeled. And if you go to the Mina Research Forum, I have the legend for this as well on what this process is. One second here. So if we go to the detailed proposal here, then if we go to the risk side of things, yeah, if you look at this, right, this is what I wanted to anchor you on. So this is a process, right, and it can be modeled anything. This is a OMG, Object Management Groups process, and this is running in SAP, has an adapter to it. Everybody in the traditional world has all this. So you can say, right, this is a start thing, this is an end thing, and the purchase order. After the purchase order, the booking or the invoice, anyone can happen, but then you need a shipping instruction before you create the BL. And then depending upon the jurisdiction, you might have other documents, or you can actually move on to the received state to say this BL is good. And then you can further say if the hash of the content is right, and all those checks can happen. But this is a process where somebody will have to say this actually went through this process, and it could practically model anything. For example, if you want to prove that the stablecoins have a particular reserve, that offline audit process, you can take it through these steps. And you can attach, okay, a physical wet signature that might have happened can be translated to say this is going to be the on-chain representation, or it's a combination of on-chain and off-chain, however you want to kind of map this process out. But if you want to prove the actually happened there, let's say, for example, somebody puts out the expected and somebody submits the actual, you first want to verify that whoever is submitting the actual understood the expected, and then you're taking the signature of that person that is putting the actuals. Then from that point on, basically you can model all this in BPM and IO, right? So this is one such model, and this is the expected model, and this is one of the models for accepted each of the paths, right? There are 4 paths here. 2 paths are accepted paths, 2 paths are rejected paths. So what happens here is in this process, I'm kind of picking up the expected path, and then I'm kind of passing the accepted path. So internally, what is happening is this business process models are mapped to the underlying graph traversals that eventually we were able to map it to a regex. And then we kind of used in the Mina ecosystem, we had ZK regex. So we tried to call that, and it worked basically. And then a little bit of extensions had to be done in some specific cases. So we have done that. And now we are able to say, for a given standards-based process, if it is deployed as a BPMN, I will also be able to prove the business process actually happened like that or not. So time-wise, it's taking a bit, but there are further optimizations possible. But this is more of a to make sure that the round trip is going through. While this is happening, I also want to run yet another thing where the same concept, we have been also able to run. Building on that, we have been able to say, okay, now can I actually run a business standard data integrity verification of the entire bill of lading, right? When I say what is it that the entire bill of lading, why is it important? Then the idea here is in the bill of lading standards, it is not just checking where is the bill of lading and here is the hash, but it is also going into saying, is the internal details on what's in that invoice, is it really shipping tea, or is it mismanaged to ship something else that is going to cause a conflict in the smart contract later in terms of mapping that business process back to payment terms, for example, right? So here, if you look at this Swagger, right? So if you look at this, each of these references, this is literally the document reference for the electronic bill of lading version 3, which is the title document for bill of lading invoice financing. In there, if you get into the details of it, right? So if you get detail into the schema, you can do things like, this is a max length of 30 and a pattern of this and all that stuff. And sometimes there will be enums to say it can only take these and these values. So the thing what we are doing is basically to okay, we are kind of reading that entire JSON, for example, and for this JSON predefined for this schema, we have generated that circuit to check for each of the values that the financier thinks that is needed. Again, it is configurable. It is not just we have to do one thing. It all depends on how much validity they want to have, and we can template it eventually. But basically, what this is basically trying to do is getting through that whole process and running it through, because I'm running it locally, it's a little faster. This the same thing. Each one of those processes goes through the circuits to generate the deep business data integrity as well. So let me just go back to the React and make sure if this came through. Yes, it came through. So before, the value for the risk was 100 for this accepted status. And the after verified value, this is coming back from the smart contract, that's 90. And then I'm also trying to do a rejected situation. Okay, let me run this as well. Okay. Basically, while I'm running this, kind of going back to this data integrity, this is a deep integrity of anything and everything that you want to build on this. Now, what this means is you can now say if your smart contract needs to do checks that are off chain, that is going to try and orchestrate a bigger orchestration. Those orchestrations, if they had to be done off chain and pushed through, that could be done as well, which would say, what is the invoice details in the invoice, in the bill of lading is exactly what is in the purchase order. It's all actually what is in the remittance as well, remittance invoice as well. So you're getting a full 360-degree check of the entire process. This is like saying your workflow engine that you would have otherwise done with the n number of systems in your off-chain mode now can be brought together under one system. I don't want to use the word workflow because that kind of gives you a sense that typically it goes step by step by step. But here, what you can do is you can set up saying these are the constructs that has to be matching together, and risk zero has had similar concepts. So we are kind of trying to achieve the same thing with respect to inter-data integrities as well. We have not built that yet. That is going on right now. Okay, so this is the example that I wanted to see. And finally, I want to also show the Docker engine that is running. This is the Docker engine. Okay, so Actus has three services. One is the risk service, one is the core service, two is a risk factors database that they have, and the third is the risk service. Now, eventually, this architecture will also have to be decentralized, but let's keep that aside for a minute for now. But what we wanted to absolutely prove is if this is what is going to be if ECB and FDIC are putting so much focus on this, basically in some shape or form, these kind of servers based on this language would basically become important. And at that point, are we able to connect to this engine and get out the event streams and prove some important compliance aspects? We wanted to try and build that out. And that is what this example is going to try and do. Okay, so in this case, let's run this. Okay, so it's going through all of those. I've modeled a few contracts that some started in a few months ago, some extends into next year. But basically, what it is trying to make sure is it is trying at each place it is going through that HQLA, high quality liquid assets. What that means is, in simple terms, what it means is the bank going to be solvent or not? Is the protocol going to be solvent or not? Right? Whatever they say, like if this is taking n asset, n number of assets, and each one of different types, for example, Actus mandates if it's a security, then that asset will have to be taken at certain percentage of the value, and then you can account for so much of what you want to show towards the compliance of this. If it is completely cash, that you can liquidate it, and then that is 100%. So tomorrow, if people are trying to be creative in this institutional DeFi space, we do see not just on-chain only assets, but also an on-chain only asset along with a supply chain invoice. That's what we are trying to eventually get into, right? But to be able to do all that, you need the business infrastructure to put it together, and that's what we are first building. We're putting the tracks, and then we can build the train on top of it. That's the idea here. So here, what it is trying to say is that HQLA with a ratio to the net cash flows at that point has been good across the board. And I'm running it for the entire simulation, because at any point in time, if I want to prove this, I can prove this. But typically what that would mean is current day plus 30 days, there are some ratios. Current days plus 365 days, there are some ratios. And then on top of it, there are some capital tiering ratios, which are the next set of extensions we'll be doing. We have just done liquidity so far. But Actors is basically would be able to help out do all these netting with respect to these things, liquidity and value at risk. And this is a constant stream of events that are coming in from these. All right, so that's this last thing that we have built. So I just want to go back to that negative example I ran as well on the screen. Let me see. Verification status. If it's verified, if it is verified false, my exim risk was 100, my supply chain risk was 100. But then in this process of checking that business process, it found out that the rejected examples signed business process, the assertion of the circuit failed, and hence it did not change the smart contract data. All right. So this is what we have done so far. I'll stop here and I'll take any questions. Hopefully this is what we have done really is take some real business concepts and what the kind of proofs that has to be done into real applications at the depth of what is needed and leveraging what Mina gave us. There are some things that we have noted as what needs to be improved for this really to be latency wise improved. We can talk about that. But our focus right now is there are a lot of teams working on speeds and efficient proving algorithms and things like that. So and then ecosystems are working on how do I take this proof and put it into other blockchains, all that stuff, and how to create stable coins out of Mina and all that stuff. But all those needs supporting infrastructure, and that is what this project was really focused on. Okay.
Right.
And it is basically building on ZK regex type projects. So my heartfelt thanks to Mahmood. Has been helpful in a couple of calls when I first pitched the idea, and then when I came back and said, this is how I'm kind of using this. I'm taking this business problem and converting it into, because it suits well with that DFA and a pattern of DFA, as long as I can institute a few templatizing on this. It has to be a closed loop. There are some things that we will kind of put out and say, when people are doing these BPMN models for this institutional DeFi purpose, for it to be closure driven in the smart contract, we probably will have to do some constraints.
Cool. Thank you, Satya. If the audience has any questions, please feel free to raise your hand or put it in the chat. Right. I don't think there is anything from the audience, Satya. So thank you so much for coming on and sharing the work. that has
To
been
wrap
fun.
up, basically, I've updated the deliverables section, Harish. There were a couple of changes I made this morning. Probably in a couple of hours, I'll be able to do another update of the deliverables. Please pass on the Git handles. I will kind of share the current GitHub. What I'm also thinking of is basically, cleaning up that one more time and kind of getting ready to a cleaner move, and probably I'll give the next think of it as like dev to UAT type of a thing. So basically, I can give that link to the both repositories.
All right, I'll do that.
Okay, so with respect to the deliverables themselves, where we are is we have completed everything we said we'll do in the iteration 1. Plus, we have pulled out a few things in iteration 2. On the UI side, there were a couple of things that slowed us down, but Atank was very helpful in flushing through all that. So those pieces where we have to build, we have put the basic UI, but hooking it up to the wallet and a few more end-to-end encryptions, those kind of things, we will kind of catch up. Right now, we have proved all the infrastructural connectivity, and the proofs we wanted to do are all working. Now the question is about packaging it, and also packaging it both in the technical sense and as well as on the business sense. And that is why today we focused half on the business side and half on the tech side. So I would definitely need help from this team to kind of, wherever you guys think I can do this to the next level, please help me out.
Absolutely. All right, so I think we can close this call. Thank you, Satya, for coming on, and thank you all for joining. I'll share the recording of this shortly.
Thank you. Thanks a lot.